Hello everyone, my name is Romeo Razi. I'm a CPA and I used to work at the IRS. Today, me and my friend Yoav are going to be talking about everything IRS. We're going to be talking about what to do if you have assessments, what to do when there's collections. We're going to give you guys some stories about what it was like when people are audited, whether or not when I was in the IRS or outside of the IRS, defending people. We're going to talk about when the IRS discharges your debt and when they don't. Now, this interview podcast is going to start off a little slow because this is the first time Yoav has ever done anything like this. But he's been doing this for about 20 years. He deals with a lot of IRS remediation. And so just stay with it because it's going to have a lot of really good, informative gold nuggets in there for you. And I'll definitely put some timestamps in the comments in case you want to skip forward and just skip the intro. I hope you really enjoy it. Hey everyone, Romeo Razi, CPA here. Today I want to introduce you guys to a very good friend of mine, a colleague of mine, that I met when I was auditing his client when I worked at the IRS. And he's going to tell us a little bit about himself, and he's going to tell us about what happened and how we met and how it started a wonderful friendship between the two of us. Yoav, why don't you go ahead and tell everyone who you are and how we met?
Well, okay. So my name is Yoav Etzion. I'm an enrolled agent, licensed to practice before the IRS. And I own a tax and accounting practice for the last 20 years. And actually, very early on, I think it was 2000, around 6 or 7, I received a phone call from a client. He wasn't I didn't do his taxes. Heard about me, wants me to represent him. He had an audit, income tax just for his company. And that audit was referred to self-employment unit mainly for employment classification. So 1099 people that's supposed to be payroll employees, and as that part of the audit was open and expand, Romeo was the auditor, and I received a letter from you, and we started the audit, and that's actually how we met.
Yep. Yeah, that's how we met. I audited your client because he had a bunch of truck drivers that were 1099, and I was reclassifying them to employees.
Right.
And we ended up going through that audit. And then I don't think we worked together on a case while I worked at the IRS, but then sometime after that, I ran into you at the gym after I quit the IRS. And then we just kept in touch, and we've become good friends since.
Right.
So what I wanted to talk to you about today is what's going on with the IRS, what you see with the IRS. I know your practice does a lot of IRS remediation. Now, I worked at the IRS, and I can do IRS remediation, but I don't like doing it personally. However, when I talk to you, you seem to love doing IRS remediation. So why don't you tell us a little bit about what you do with IRS remediation, and then afterwards, tell us a little bit about what you're seeing with the IRS regarding everything with the budget cuts and Trump and what they've changed. Why don't you go ahead?
Okay, so when you're talking about IRS representation, everyone's talking, I need someone to represent me. It's really divided into two. IRS audit and IRS collection. So IRS audit is when your tax return is being selected for examination. IRS collection is when you owe a lot of money and you cannot afford to pay. And then you have a lot of collection alternative. We call it either payment plan, either offer and compromise. And the sad thing about the IRS situation right now is, just to give an example from Vegas. In Vegas, there used to be more than 20 revenue officer in collection. Mm-hmm. Today, there is less than 5.
So let me just break it down for people that are watching. When someone says an IRS agent, that's like what I used to do. I would assess the tax.
Right.
But when they say IRS officer, An officer is a person that collects the tax
Correct.
after an agent has assessed it.
Right.
And so what you're saying is there's less agents or less officers?
Less officers.
There's less officers.
Less officers.
So what does this mean for people who owe tax and they have issues with the IRS and their collections?
So it's making our job harder because you're trying to come to a solution and to resolve cases, and they're just pending for months. So just to give a live example, if you don't agree with collection, you can go to appeals.
Right.
And you go to appeals, and even when you go to appeal for collection, they still have to review your financials.
Right.
Okay? They don't do it. That part of reviewing the financial go back to regular collection.
Mm-hmm.
When regular collection review the financial, they send it back to appeals. We had a case, we're waiting for 6 months for collection to review the financials. Nothing happened. The appeal officer, he's buried with cases. So he keep telling me I have to wait for collection to do their work. I find at the IRS manual that if collection don't reply to them within 45 days, they have the rights to analyze the financial themselves. So the appeal officer wasn't nice, but since it's in the manual, they have to do it.
Right.
So technically, we force him to close the case. But what happened now, they overwork with cases. Usually in appeal, they're supposed to have 50 cases per appeal officer, or they call them settlement officer. Right now, they have over 80 or close to 90.
Oh, man.
So everything takes forever. We send document to the service center. On other cases, document just sit there for months. The client get upset because they think we're not doing anything, but the truth is that the IRS don't even open them. We had another case, this is related to international, that we sent documents 7 months ago. Last week was a nice lady on the phone told us, hey, here is the truth. Nobody opened even the file. I'm going to take that file to my inventory and take care of it because it was easy fix.
Right.
So what happened is because the short hand employees, cases just sit for months without nobody touch them, and it's frustrate everyone. We like to also move the inventory and close the cases and provide the client with a resolution. And the client is frustrated because they don't understand why it takes so long.
Yeah, no, I currently have an issue like that. I have a client of mine who they had, unfortunately, their husband passed away and they accidentally double paid their tax. And so a refund check was mailed, but it was never cashed. So I contacted the IRS and said, hey, we need that refund check. Like 3 months go by. I contact them. They said, we're moving it. It's gonna be issued. And then another 3 months go by, and I talked to someone yesterday, and they're like, oh, well, it looks like someone was right about to issue the refund again, and they haven't. So then they're telling me, well, I need another 30 days. I'm going to put a note in the system, and if it doesn't move within a month, then you need to call taxpayer advocacy. And now it's been 6 months or 9 months, but they haven't gotten there. And it's around $25,000 is this refund check. And so I'm finding that anything, not on the collection side, because I don't deal with remediation regarding, collections. I usually deal with audits. I'm finding with notices, audits, things like that, the IRS, things that normally take 3 months are taking 6 months.
Yes.
Things that take 6 months, they could take like a year. And that's the big challenge I'm seeing. So are you seeing a lot more people getting audited now? What do you see as far as the audit pool going?
Not necessarily. I think there was this term everyone used to use, the tidal wave of collection.
Uh-huh.
So the IRS was holding on millions of letters to go out for collection because they didn't want to flood the system with phone calls and with people. So now they start to release those. So we see increase in collection. So since COVID, they were holding a lot of the collection notices and release them slowly. And in the last 6-7 months, we see flooding in collection, and there is another wave that is coming. So, but the problem is they send everything to as for our viewer, they send everything to what we call automatic collection system, ACS.
Right.
And then it's somewhere in the cloud.
Right.
The case is nowhere. You just have to, every time you call, you talk to someone else, where we like to push the cases to the local office.
Sure.
To work with the individual from Vegas or from the local office where the taxpayer is, so we can address it. Usually, it's addressing the issue faster.
Got it. So basically, right now, and do you find most collections issues start in ACS? Is that where they mostly start?
Always start with ACS, and the case doesn't go to collection immediately. Of course, it's have to go through a series of letters, and when it's finally get to collect, so it starts with what we call soft letters.
Okay.
So, hey, you owe the taxes. It's a reminder. And then the second letter, 2 months later, it's a little bit, the tone change a little bit.
A little bit more aggressive.
Yeah. And then once it's go to collection, then the letters start to get aggressive, very aggressive. And that's where usually when people calling us, when they get letter intend to levy, we're going to put lien on your Social Security, and then they wake up. We have a client, right now we have a case in our office for someone who didn't file for 8 years, and he didn't call us until they garnished his wages.
Oh.
So now he wakes up. So we immediately file for CDP, which is collection due process, to stop the process.
Garnishment?
Yes. And then we're going to go to appeal. But now he's in a rush to file everything. And that's what I tell people, hey, it's like with a dentist. If you don't take care of the problem when it's a small filling, you're going to have a root canal. So now it's a much deeper issue.
Do you find that a lot of the people that come to you are because of root canals?
well, people always, like anything in life, they push until the last minute. So they get the first letter, they don't want to open. We find out that a lot of people trying to avoid, they think if they're not going to open the letter, the problem will go away. And I tell them, no, you're just making it worse and worse. So the first time you get a letter, call us. That's the time to start to address it. And we have much more time than when you get finally the intent to levy, and now we're under the gun to do everything quick.
So let me ask you a question. Let's take a taxpayer, for instance, and let's say they haven't filed for like 8 years, 10 years. And then you go back, they come to you, and then you go back and file their returns. Turns out they owe some obscene amount of money. Let's say they owe, I'll just put a round number like $100,000. And they don't have a way to pay it. I see a bunch of commercials, and I'm sure a lot of people listening see commercials and news about like, oh, if you contact us, we can get rid of your debt to the IRS. And I know earlier you mentioned offer and compromise. Can you tell us a little bit about offer and compromise, how it works, when people are eligible, how the process goes?
Yeah, so first of all, to let the listener know, if you didn't file for 10 years, not necessarily will file 10 years of back taxes. The IRS definition of compliance is the last 6 years.
So they want you to be, because when I work there, we'd always want people to get in compliance.
Right.
So as long as you file the last 6 years, they feel you're brought up to compliance.
Yes, but I'll give an example. The case we do now, the gentleman did not file 2016. So the IRS filed what we call substitute for return.
Right.
You always have the right as the taxpayer to go and file the actual return.
Got it.
We prepare it. We saw that it's saving him $30,000. He owes on 2016 over $400,000. But it's still, when we prepare it, it's saving him $30,000. It's a lot of money.
Sure.
That's the only time you're going to go, or if you know you have losses that you want to carry forward.
Right.
If not, we're going to prepare the last 6 years.
Got
That's
it.
to bring you into compliance. So now, back to the collection alternative. Now he owes all that money. $100,000, $400,000, $2 million, it doesn't matter what. Then we have to decide, are you going to do payment plan or are you going to do offering compromise? My biggest myth about offering compromise, that it's where people said, oh, we negotiate with the IRS. So this is what I like to say. On offering compromise, we never negotiate. I will elaborate in a minute. On payment plan, we negotiate a lot.
Well, why don't we talk about payment plans? Because a lot of people, I get a lot of clients and a lot of taxpayers come to me that are freaked out about getting on payment plans, and they're afraid of what happens with the IRS and a payment plan. Let's talk about the payment plans for a minute.
Let's talk about that, and then we'll go to also. If you owe any amount of money that you cannot pay, the IRS will work with you to do a payment plan. there is a few type of payment plan. The most common one is if you owe under 50. If you owe under 25,000, it's called streamline. And then we just taking the amount you owe over the life of the statute. The statute means how long the IRS can collect it.
Right.
Usually 10 years. Usually we'll do the payment plan with the IRS over 6 years. People have to remember that any balance that you still have, interest and penalty will keep occurring.
Right.
Okay?
So even if I'm on a payment plan, the interest and penalties keep going until it's paid off.
Exactly. What you actually do if you're on a payment plan, you stop the collection activity by the IRS.
Got it. So no more letters, no more I'm going to levy you.
Exactly.
Okay.
If you owe over 25,000 but under 50, we still can do streamline, but only if you have automatic withdrawal from your account for the payment plan, the IRS will not file lien against you.
Got it. So if I'm under 25,000, simple payment plan. Under 50,000, streamlined, they have to direct debit the money from your bank.
If not, there is a lien.
There's a lien.
Yes.
Got it. So they won't give you a lien if it's
they're not going to file the
first lien.
They're not going to file the notice of lien. But by statute, even if you file a tax return and you owe $1,000, there is a lien by statute. They don't file
with the city.
With the city, but by law, the lien is there.
Got
just
it.
by the statute.
But it's not public.
It's not public, yes.
Got it.
Over 25, they will file a lien if it's under 50, unless you do the automatic withdrawal.
Got it.
Over 50, lien.
Lien. With the county.
With the county, and now everyone knows that you have a lien. Usually they file it on your Social Security, so there is no issue. It just sits on your credit.
Right.
We fight it. You can file against CDP, collection due process, and you want to go see an appeal, and you need to be able to explain to them why lien will actually jeopardize collection. In some cases, it works. In some cases, it's not. So if you have someone, he's in the financial industry, and now if you hurt his credit,
right, if he works for the SEC or something like that.
So then he can lose his
licensing.
License, yes. Now, I'm not a credit expert, even though the credit bureau promise, I didn't see it works, that IRS liens just on your Social Security should not affect your credit.
But you're not sure about that.
But I've seen only problem from lender about it.
Right.
So this is what happened now when you're over 50. When you're over 50,000, we have to do full financial
disclosure
and do financial to the IRS. People that don't take care of their balances and they owe over 50, the IRS can notify the State Department and they can revoke their passport.
Oh, wow.
So this is where the problem starts.
Oh, my, I didn't even know that.
Yes.
They can revoke your passport.
Yeah, they can revoke your passport if you owe over 50 and you don't address the issue.
Oh, my God.
So they don't do it immediately, but I've seen a lot of people coming to us where they revoke their passport.
No kidding.
Yeah. We have actually a client now that his offering compromise was rejected. He owes $600,000. Immediately they revoke the passport. We filed for appeal.
To reinstate the passport.
We didn't agree with the offer unit.
I got it.
We filed for appeal. When you file for appeal for offering compromise, it's one of the exception for the passport. Automatically within 30 days, he got his passport
reactivated.
Yeah, so there is a lot of small things and nuances that you can play with them. But once we do the full financial, and this is what people need to remember about those financial, the IRS will take your income minus allowable expenses.
Allowable.
What is allowable expenses?
My Gucci bag.
Well, but I'll give you the best example, okay? The IRS will tell, okay, so let's say you bring $10,000 a month and you have expenses and you have $1,000 because you want to drive, $2,000 because you want to drive a Bentley.
Got it.
Okay? When the IRS does their income minus expenses, they don't tell you, don't sell your Bentley, it's all good. But in the formula for the payment plan, we're going to allow you only $300 against your Bentley.
Got it.
You said, but I spent $2,000. I said, don't sell it. We allow. And then what happened is the payment, the monthly payment they require from you is much more than you can afford. And in my opinion,
Mm-hmm.
this is when you do payment plan, it's the only time that the IRS will negotiate with you, or at least that's my experience. Said, oh, the formula on your forms show that you can pay $1,500. We negotiate it for less.
Mm-hmm.
Mainly because I argue with them that life happened.
Sure.
You can't.
So just to go back to your example, so if I owe a bunch of money, they run my calculations. My lease payment for my Bentley is like $2,000 a month.
Mm-hmm.
The IRS comes and says, listen, we're only going to give you $300 toward your lease payment instead of the $2,000 I'm paying. But you're saying that I could maybe negotiate with them on that and say, well, okay, let's split it. Let's go 1,000.
Yes.
Or okay.
And many time, the other example is groceries.
Groceries.
The IRS has tables for every state, every city, every county, and how many people in your household.
Got it.
For 3 people, they allow $400 a week. They say, but I'm spending 6. They cannot. They have to equal everyone. They have to treat everyone equally.
Sure.
So over there is where we negotiate. And on payment plan, I've seen a lot that the IRS will bend just to close the case.
Got it.
What they do a lot, if you still cannot, they calculate the payment
out
in the life of the statute.
Right.
If it's not, we do what we call partial payment plan, where they put, okay, let's say the payment, the numbers come up to $1,500
a month that I owe the IRS.
Yeah, so we negotiate with them. Yeah, say, let's do partial payment plan. Let's do $500 for 2 years. And after 2 years, it's gonna jump. After 2 years, we go and we negotiate again.
Got it.
But meanwhile, sometimes it's buying time for the taxpayers.
So what happens when you get close to the end of the statute?
So,
just so people understand,
so
once a statute hits, they can no longer collect the money.
Right. So a lot of time, we have a client 2 days ago, came to our office. He doesn't make a lot of money. He owes $60,000. March of 2026 is statute expire.
Okay.
I told everyone in the office, don't touch it.
Right.
Don't do anything. I think it's a malpractice, because what happened if you start to negotiate payment plan or anything, it stopped the clock. So now the IRS has 10 years to collect, but there are some tolling events that stop the clock. So if you close to the end of the statute, I tell people, I don't want to touch your case. Don't do anything. So this gentleman who came to us, I told him, I don't want to help you. I don't want your money. I don't want to do anything.
Because you're so close to the
so
statute.
Close, and if they didn't collect until now, last year we had a lady that owed $110,000. We waited 1 year. And on the day of the 10 years, it's just drop.
Right.
You don't have to call them. You don't have to do anything. It will drop automatically.
You know, I had a friend of mine from college. His wife had this IRS thing for many years, and she didn't want to call them because she was so afraid. And I mean, you and I deal with people who owe like $300,000, $400,000, millions. She owed maybe $20,000, and to us that's not a big number, but to her it was like huge. And I said, you want me to call them? And she's all, no, totally terrified. So finally, like 5-6 years go by, she comes to my house. She's all, call them and find out. And it had dropped off like 3 years
ago. Yeah, there you go.
And she was like the biggest sigh of relief, because she had just had this anxiety going on in her head for years over this money. And it wasn't like she had money. Her and her husband have like one house and nothing else. No pension, no stocks, no nothing. All they have is a house, and that's it. And so like some Social Security. So she was really, really freaked out. So
what we do for our client, we use a software once we have power of attorney that monitor people's transcript account. We set it up for weekly, and anything that happened on your account, we get notification.
No kidding.
Audit notification, I get 3 to 4 months before you get the letter.
No kidding.
Yeah, as soon as someone touch it, even before it's, because as soon as it's assigned to examination,
a person, right?
It's at the inventory, but it's not assigned to auditor for like 3 or 4 months. At that point, we already know. So we tell the client, hey, you're going to have audit, let's start to work. And so we do that service, or for collection. Anything that happened on your account, we can monitor, and we get email on a weekly basis for people who wants us to monitor their account.
Yeah, I'm going to have to talk to you about that software.
So now let's go to offering compromise.
Okay, it's commonly referred to as OIC, but offering compromise. Why don't you tell us a little bit about that?
So offering compromise, you basically come to the IRS, to the government, if you will, and you said, hey, I owe you this amount of money. I cannot afford to pay. This is based on your criteria. I'm going to offer you this.
Right.
And we're going to settle.
Okay.
The problem with this program is it have to be equal.
Right.
So it's very hard to be accepted because you paying your taxes, I'm paying my taxes, and now, hey, he made...
Jimmy
said, hey, I don't want to pay. It's not fair. So the government is very strict about it.
OICs, they're very strict.
Very strict. And there is a report to Congress about OICs. What happened with them? Because it's create unequal system for people.
Got it. I got it. And it becomes political.
Very political. So now the whole idea with offering compromise, there is a formula. And here you have no room to really to negotiate. The only thing we call negotiate is what we do is a lot of time is interpretation.
Okay.
Of mainly the IRS manual, even less they have rules of what is exempt, what is not exempt, how much you can take out of the formula or not. So
this is outside the IRS code. This is the
IRS manual, and it's tell you what you can and cannot do. And we argue with them about the interpretation, and that's where we're going to go to appeal if we don't agree with them.
Right.
I will connect that to the beginning of the conversation. We have a gentleman in Vegas that is a great veteran, served the country. He owed about $600,000.
Right.
We're doing an offer in compromise. His case was transferred 4 times.
In OIC.
In OIC.
Not
from
in
Denver
appeals. You're talking
to Houston to Louisiana. And it's been 2 years now. And until we got a decision reject, because there is some gambling involved. And I don't think they treated the gambling correctly. So we appeal it, and we request to appeal in person. By the way, just a side note, if you file an offer in compromise,
right,
and the IRS did not reply to you within 2 years, it's deemed accepted.
No kidding.
Yeah.
So if I send it,
and they screwed up,
and Trump fires everyone,
and someone didn't touch it,
and no one touches it
for 2 years, it's
accepted.
Accepted, yes.
Got it.
So there is so basically, back to your question about the TV.
Right.
What happened a lot with those cases?
Right.
If you read one time, stop the TV and read the fine print.
I got it. When there's a commercial that says,
"We'll negotiate."
Yeah.
So most of them, you're not qualified, and they end up charging you for offering compromise when you end up doing a payment plan.
Got it.
So let me tell you a war story.
Okay.
We have I had a client a few years ago. He owed $2.1 million to the IRS.
Okay.
We offer $75,000
out of 2.1.
Yeah. Between the time you submit the offer and until they make a decision is about 1.5 years. And I tell the client, do not change how much money you're making. He did. They came back with a counter offer of $205,000. We settled, which was, so now I tell people, oh my God, Yoav, you're great. I said, no, I'm not great. He fit the criteria of the program.
Got it.
That's it. And we settled. And one thing it's very important to say, once you settle, you have to be in compliance, and you cannot owe money on your taxes for 5 years. If you owe money, the offer is canceled, and you owe all the back taxes.
Got it. So in this example, he owed 2.1. You offered 75. They settled at 250
because he made more money during that year.
Right. But he settled at 250.
205,000.
205. They settled, but he now has to file and pay all his taxes for the next 5 years.
Yes.
Currently, and if he ever misses or is late, they can claw back the other 1.9 million or 1.8 million that they gave him a benefit for. Got it.
So one thing I want to tell everyone, 2 stories related to collection.
Yeah.
The IRS is not always right.
I know that. I know that.
So I want to share a procedural mistake they did on one of our clients that saved our client close to $1 million in penalties.
Oh, no kidding.
So when a company owe payroll tax,
right?
If you think about payroll tax, There is Social Security, Medicare, and withholding that's taken from the employees.
Right.
And then there is the taxes that the company paid.
Right. There's the employer side of
Employer
FICA,
side, yes.
and then there's like, if
Side
I
of
work for you,
Yes.
you pay me $1,000, you're holding $250 to send for my Social Security, Medicare.
Exactly.
And then you're also paying another,
Yes.
let's say, $200 for the
Right.
employer side, right?
So the side of the employee,
right.
it's called trust fund.
Trust fund. The one that comes out of my
yes.
check is
Yes.
trust fund.
So if company does not pay payroll tax, the IRS will go after usually the owner or any responsible party after the trust fund. Why? Because the employees, we file now the W-2s, they go to claim their benefit, but the company didn't get the money
right.
from the employer.
The IRS didn't
Right.
get the money from you.
Right.
In this
So
example, right?
We have a case of $14 million of payroll tax.
Okay. 14 million.
14 million. And we actually, this case, we involve a tax attorney.
Okay.
And the trust fund was like 6 million.
Okay. That was the withholding part.
Yes. And on 2 periods, on 2 years, it was like $1 million. But what we find out, to assess trust fund, you need to have manager approval.
The manager in the IRS
Has to sign.
They have to sign off
before you assess the penalties.
Got it.
So the case was already developed. The client received notices that he owed the trust fund.
Right.
We did what we call FOIA request.
Freedom of Information Act request.
We want to get the file of the auditor, of
right.
the
IRS
the
agent.
IRS officer, yeah. And we find out that the trust fund was assessed in December, but the manager's signature was in April, 4 months later. So what we think happened is that it was sent for processing. They realized that the manager didn't sign, and it's all electronic, so you cannot.
Oh, it's not wet
Yes.
signatures anymore.
And then we went back and we request abatement on close to $2 million because they were not assessed correctly.
Right.
So I always tell people, the fact that the IRS tell you something, it doesn't mean it's always right. I think I share with you, but I'll share the story here. We have a client that we filed is 2022. We took a credit for the Tesla.
Right. The 7,500.
Yes. And it was a weird situation where he put a down payment and only a few months later he purchased the car. A year after we filed the taxes, the IRS sending us a letter that he's not qualified.
For the $7,500 tax credit.
We send him a letter saying he is qualified. Here is why, A, B, C, blah, blah, blah.
Right.
They come back to us 6 months later. No, he's not qualified.
Right.
I got really upset. And then I even the tone on my letter was a little bit more aggressive. And I told him, you guys are wrong. Check yourself. And again, here is why. And last month, in October actually, a month and a half ago, after 6 months after we sent the second letter, we received a letter saying, you're correct, we approve the credit. So I always tell, I tell everyone in my office, lesson learned, they don't know everything.
They don't know everything.
They have the same code, the same regs, the same IRS manual, and the fact that an employee tell you something, always doubt them, always go check, and you do your homework and always be ready to rebuttal them.
Yeah, it's been my experience that IRS agents that used to be CPAs on the outside are pretty smart because you and I have to file like, 1,000 returns a year, at least. Whereas the IRS agent might only touch 100 returns in a year. So they don't get the vast, and all they're doing is an assessment. Where you and I have to worry about the entire code section, all of the code, they only have to worry about certain slivers when they're auditing people. I have a similar story, which was a referral you gave me on worker reclass.
Yes.
As I had a client in which they were trying to reclassify his pest control workers into employees. And I went ahead and interviewed the client, and the IRS agent was really, really she was very difficult. She was very difficult. And I realized after I interviewed the employees, because I worked at the IRS and I did a bunch of these audits, I realized that her case didn't make sense. I found contradictions. I found math errors. So I went ahead and I put together my argument and sent it to her. call her to discuss it. And she's like, and she goes, okay, I got your report. I'm all, and she goes, I'm not going to consider it. I go, why?
Wow.
And she goes, because I'm not going to consider it. I say to her, well, legally, you have to consider it. When I send you a report, and I told her I used to work at the IRS, when I send you my argument, you have to consider it, and you have to write a rebuttal to me about what I wrote. Like, why do you disagree? You can't just say, I don't care. And she goes, well, I'm not going to consider it. She's like, you can send it to appeals. And I know, working there, that that's not the way it's supposed to go. So I say, I want to talk to your manager, which I knew I'm entitled to a manager conference. Manager gets on the phone. He's at first very difficult. And then I walk him through everything in my rebuttal. And under his breath, I could tell he was like, because he knew they were lost. He knew they were lost. And ultimately, I asked him, because he was like telling me to send it to appeals. I told him, look, try to find someone in IRS counsel to look at it, because otherwise I'm going to have to charge my client more money. And he tried to find someone. Long story short, we sent it to appeals, and the appeals agent, upon opening the case, he closed it. Amazing. He called me, and he was like, I don't know why they sent this to me. Like, they are dead in the water. Like, the appeals agent knew. So a lot of times, these agents either don't know. The other thing I tell people about the IRS is, like, they deal with, like, they have, like, this system. It's called a diff score, where they calculate, like, what clients or what taxpayers should be audited. And they get, like, the most egregious people. And that's all they're seeing constantly. And when I work there, every single person I audited, I caught in a lie. Like, you're constantly, like, people are just lying to you. So you start getting this thick skin, and you just think anyone who talks to you ever is a liar. That's what you think. And so I'm sure that's what she thought. She thought, he's a liar. He's not, you know? And they hate, once they've gone down a road so far, they don't want to turn around. But I agree with you 100%. Like, you shouldn't take anything the IRS agents say on face value, especially, like, if you have a CPA or an EA like you who has experience dealing with these people, with the IRS, you'll know right away what you can or can't do, right, and if the IRS agent knows what they're doing or not.
One of the things we do in audits to protect clients is every time we have this agreement with the IRS, so most people will say, hey, I want to go to appeal, and we never go to appeal. What we do is, with the tax attorney I'm working with, so let's say at the end of the audit you have 3 or 4 items that you don't agree with the auditor. So if you go to appeal directly, appeal can look at anything on the return. So what we do with the attorney, we file petition. At the end of the audit, when you get the stat notice, you have option either to go to appeal or to go to the tax court.
Right.
She will file for us petition to the tax court.
Right.
The tax court will not look at the case.
Right.
Will push it back to appeal.
Right.
But by doing it, now appeal can look, because it came from the tax court, only on those 4 items. So you're kind of protecting the client.
Got it.
And back to what you said about replying to us, I always want to get, before I go to appeal through the tax court, I want to get the reply of by the IRS auditor, because it's kind of putting the IRS in a corner about their position about the issue. So later, if I need to argue, now they're already committed to a position on some items. So it's much easier than when you have the position and they come to say, hey, your position is incorrect.
Absolutely.
And by doing it, it's a little bit more expensive to the client, but it's protecting them so much from expanding, because sometimes appeal, if you go directly to appeal, I said, oh, okay, this, but I find another problem.
Right, their exposure actually gets bigger if they go directly to appeals. But if you're saying, if you make the court send them down to appeals, then they're pigeonholed into that, and the exposure gets limited.
Right, and which I always tell client, and by the way, if we don't agree with the appeal, after that, we go to talk with the IRS attorneys.
Got it.
So I have several cases that were actually settled by the IRS attorneys,
and
not by appeal. And so every time we're starting an audit, I always tell my client, an audit is really just the beginning of an audit.
Right.
And I met a few practitioners that always tell me, some of them don't even reply to the audit letter. They let the IRS do whatever they want because they believe the auditor will not be able to address everything. So they let them assess whatever they want, and they do the petition and go to appeal like that.
Oh my God.
Yes.
So
they ignore the letter, they ignore everything. You know?
Oh my God.
Yeah. And you need thick skin for that because he's going to look for you. And
Well, I'm glad you do this work because I don't like doing it anymore. I have enough IRS stuff.
I get really emotional when they don't do justice with the taxpayer.
Right.
So I'm getting very emotional about it, and that maybe I always feel like it's like some days I feel like that's the reason I like to do it, because just to bring justice to taxpayers, So it's what gives me motivation to go and argue with them over and over.
Well, you love it, so and I love talking to you about it. So, is there anything else you want to let the audience know about you and your services and like your web? Where can they find you? What's your website?
Of course, our website is www.yjetax.com.
Right.
And we're here,
Okay, great. I'll definitely, when I post this on YouTube, I'll definitely put it in the notes below.
Thank you.
And I'm Romeo Razi with Taxed Right, and thank you very much.